Good afternoon, everybody. My name is Andreas Scholz. I'm the director, member of the board of DFV Eurofinance Group, CEO. It's great to have you all here, and a good afternoon again. I hope you have enjoyed the first part of the opening conference of the 21st Eurofinance Week. It's now an honor for me to welcome you at the first Visa Innovation Forum as part of that opening conference day. Many thanks to our premium partner Visa for the very good teamwork, for the very good cooperation, and for their support. This afternoon we are going to focus on innovation. As you know, the world is becoming more and more digital, and this has consequences, especially for the world of payments. The payments and the digital commerce landscape is rapidly transforming. Plastic turns digital. And that all is driven by a combination of new technologies on the one hand side, of a changing consumer behavior, of regulation, and last but not least, of new players. I'm looking forward to get more insights about Visa's role as an enabler for these new players, but also for the established players. And how partnerships can really drive and push the digital transformation in the world of payments forward. In this context, I would like to draw your attention again to the Visa Fintech marketplace. As you know, that takes place in front of room Harmony 1. We have invited international fintechs, and I think it's very important that we talk to each other and that we get some impressions, that you may use that opportunity to personally meet new and exciting international fintechs. Having said this, I wish you all now inspiring speeches and talks, power talks here in room Harmony 2. And I would like to hand over now to Ute König-Stemmler. Ute is Head of Business Development with Central Europe Visa. Ute, it's great to have you here.
Thanks a lot for having us.
The floor is yours. It's great.
Thank you.
Thank you.
Good afternoon. It's a great pleasure for me to be here and to highlight Visa's collaborative approach. And I'm very excited to have later on even a kind of reality check with technology companies and fintechs. And it's also great to have Mark Nelsen here, my colleague who is leading globally risk products and business intelligence. And he will give a presentation later on open banking. So our CEO, Charlotte Hock, this morning gave us a lot of impressions around the massive changes going on in our payment industry. And she was talking about our network. 60 years ago, Dee Hock, the founder of Visa, had the idea to create a new system of collaboration and to connect the world. No? Not working? Yeah, okay. So he had the idea to create this new system of collaboration and to connect the world, and that's how it looks like today. So we are connecting in the Visa network 3.3 billion cards, Visa cards, with 54 million merchants, with 60,000 financial institutions all around the world. We process, on average, every day 500 million transactions. Seamless, secure, and we want to be the best payment network in the world. But the world is changing. It's digitalizing. With the introduction of the smartphone, so the iPhone in 2007, smartphones became part of everybody's life. And we can see it here. This is a study around German millennials. They really look up their smartphone 56 times a day. 41% even look at their smartphone straight 50 minutes after waking up. And the most embarrassing figure is that a third of them, they really look at their smartphones during the night. This has all an influence on this kind of behaviors and way of livings have an influence on any kind of industries, also on the banking industry. And you can see it because already 79% are on mobile banking. Consumers' behaviors also changing consumers' expectations. And we heard it this morning, and I think it was Frau von Schmetter who said it. She said that they are transporting these kind of expectations from retail into other industry, and that's exactly how it is. So your customers, our customers, they are used to get, when they buy and use services, they're used to get transparency and convenience. They are offered alternatives. They get personalized offers, taking their personal preferences in account. And they get all the stuff real time. And this is the expectation they also have when it's coming to banking products and payment products. And consumers want to pay anywhere and anytime. Whoops. It's not my friend, anyhow. Anytime, but they don't get me out of it, don't worry. So consumers want to pay anywhere and anytime. So the last 60 years, we were preferably talking plastics and merchants. So we were talking really the card, the plastic card, following the ISO 7810 standard. But in the future, the next 5 years, we will talk different ways. We will talk new ways to pay. So people will pay, of course, still with their card, but contactless, with their mobiles, for sure, with wearables like armrests. This, by the way, all existing, with payment rings. So this is also something you can pay with, or with the so-called dash buttons. And the Internet of Things will give an explosion of connectivity and will offer a lot of new places to buy. So you will buy with your washing machine, with your fridge, or in the car. So this is what I mean by an explosion of connectivity. And Visa is embracing these changes. We really like these changes because the digital payment revolution will bring a lot of opportunities to build strong and also to build more profitable relationship with your customers. There's a threat. The threat is not to adapt quickly enough, but take advantage of all the products and services that we are offering to you. Because we are not coming with a out-of-the-shelf made by Visa product. No. We are coming to enable you to build and create the best product for you and for your customer. This was a change for us, and we had to change too. Charlotte was also talking about this morning. So we had to open our network, and we built a platform. We built the Visa Developer Platform. And the Visa Developer Platform is about 80 APIs, about 80 capabilities in any area of the business. And these APIs helps to improve the business and to find and to configure and to build the right products and services for your customers. It can be around risk management, so to improve your risk management. It can be about to ease authentication. You can just enrich your product proposition with the APIs, like on a loyalty scheme, or you can add a spend management tool to it that we bring to you. So we invest a lot in capabilities, but we also invest in the ecosystem. And therefore, at Money 2020, we announced the launch of the Visa Fintech program. And this Fintech Fast Track program enables us to onboard only within 4 weeks Fintechs into our network and to bring a lot of new and innovative commerce experience into our network. Everybody's profiting from that at the end. And we also we also launched an investment program, a 100 million investment program for Europe, which enables us to build partnerships, to drive digitalization and to drive the digital transformation. So all the investments we are doing in capabilities as well as in the ecosystem, they all underpin our commitment to be the most responsive and supportive network for both, for emerging payment players and for our existing partners and clients. So I now talked about the Visa's approach, about partnerships, partnering with fintechs and also with financial institutions. And now I'm very happy that we can really get some more experiences from fintechs and technology companies on how this partnerships works in reality. So please let me welcome, and I start with the north. I start with Sweden that time, not by alphabet. I'm doing it by geography. So Joakim Sjöblom, CEO and founder from Minna Technologies. And you really have a mission, you call it an ultimate mission, that you want to allow people to get control over their financial situations.
Correct.
Then please let me also welcome Nikolai Skatchov. It's Berlin, by the way, sticking to geography. Nikolai is CEO and founder of Circula, and I think you're a kind of a doctor, Nikolai, because you say that you're doing instant cure for travel expense pain.
Exactly.
At least that's what I read. And I'm very happy to have Julian here. Julian Weste, Head of Sales, Financial Institutions and Fintechs, Europe and North America from Wirecard, a very strong and important technology partner for us and offering digital platform. So it would be great if you could very briefly, the kind of elevator pitch style, introduce yourself and your companies and what you're doing. So.
Sure. Want me to start?
Please.
Sure. Ute, I think you made a very good point on consumer expectations. So what we have identified is that consumers all around the world are changing their consumption behavior from transactional-based ownership models towards subscription-based models. I'm sure that all of you recognize it when I say that you subscribe to streaming service, you have subscriptions for insurances, electricity, and telco products. So we did a very deep market research to understand how many subscriptions do people actually have, and it turned out there were a lot. So the average household in Europe have more than 20 active subscriptions. And if any one of you ever tried to cancel a subscription, you know that it can be very hard. Calling into the supplier, standing in the customer support line, etc. So what we have done is that we built a platform where we actually do subscription management for you. So you can cancel your gym card with one click, you can cancel your telco operator with one click, and we built this software as an integration solution to incumbent banks. So if you open up your Swedbank application or your Danske Bank application to our current customers, you just go into the bank and say, cancel my gym card, and you're done. So
Great,
saving time, saving money.
Good. More to come. So Nikolai.
I'm the co-founder of Circula, and basically what we do is we completely digitalize and automate the expense management, starting with German companies. So in Germany alone, you have roughly 11 million business travelers, and most of them actually work for mid-market or small, medium-sized enterprises. And the problem is it's very time-consuming. And basically what we've done is we built an app-based solution. So if you travel, you can take pictures, but you can also calculate your per diems and mileages. And afterwards, it's completely, everything is processed in the back office. And we are working now on making this 100% automated and compliant with German regulation to go paperless. And why we are here is also because we work with different financial institutions and also looking forward to deepen the conversation with Visa on that topic.
Great. Thank you.
So I think making an elevator pitch for us would be a bit difficult, but at least I will try in a minute to explain what we are doing. So we are a global full-service provider. We are operating in the financial ecosystem. We are offering the whole value chain from issuing over acquiring in a digital platform to all our customers, which could be B2B or B2C. So we are a white label specialist. And we have corporations or licensees from all global major payment networks, which is interesting for Europe. That's why I'm mentioning it. We have a BaFin regulated entity called Wirecard Bank, so it's a pure 100% bank. And we have an e-money license in the UK in our subsidiary called Wirecard Card Solutions. So this is it, what we do.
So we have a little bit more background of you guys here. That's always helpful. Nevertheless, I was talking a lot about products, getting the right products in place for the customers, and how we can leverage perhaps Fintech's expertise on that one. And I would like to quote Lars Malmberg. He is Global Head of Business Development from Danske Bank. But I need to read it because it's too long. So this is a good example of innovative digital solution that we believe can make a difference for our customers, and which is closely aligned with our ambition of giving customers full control and overview of their finances. So Joakim, you are partnering together with Danske Bank on that specific service. So why did they partner with you around your service? And what makes your product so special? Why was Danske Bank not able to provide it by himself?
Oh, that's a good question. I shall try to answer on their behalf. But in general, if you're looking at the Minna Technologies platform and what we're building, if we're going 10 years back in time and looking at PFM solutions, personal finance management, it's been a lot about insights and data analysis and pie charts and budgets. So what we are focusing on is actually providing actions. So we actually help you as a consumer to perform that cancellation or change that provider, meaning that we have more than 700 merchants or suppliers in our network, and building this network is not something that the bank would do themselves. And to be frank, the bank also have corporate customers, so Danske Bank don't want to send thousands of cancellations to a telco that is their corporate client. So we're kind of the scapegoat, and of course we are building this at such a quality level that we are 34 people focusing on one niche functionality, that they will not have the resources or the experience to maintain one solution and go that deep into the functionality.
Yeah. But so you're delivering a specific piece, but this in depth.
Correct.
And this is nothing a bank would like to do or could do. Did they even try?
I don't think any bank tried it today. A lot of them do the overview and the insights module and the analytics by themselves. But as soon as you go into transactions and actually perform stuff, which is requested by the users, going back to your customer experience or customer expectations, they want the bank to be intelligent enough to actually help you with the finances, not to just give the recommendation.
Right. Good. So you're partnering already with more traditional banks. And Nikolai, that brings me to the next question, because you're partnering with customers, more the neobank customers, like an N26 or Clark you are partnering with. So is there a difference in between partnering with neobanks and partnering with more traditional banks? And let me ask the next question. Is there a reason why you are at the moment partnering more with the neobanks?
I mean, everything, like I would say, every medal has two sides. So one reason why we decided, for example, to work with N26, first as a customer, but with the perspective to also become partners on the product that we offer to their SMBs. And also another one like Fidor Bank, which is actually also a direct bank, is that normally they're quite agile. So you don't have the legacy of an old bank. You have also maybe a more modernized infrastructure. For example, in the case of Fidor Bank, they actually had an open banking API that we could actually leverage for our use case. So if you pay with a commercial card, we use the transaction data in order to create an expense in our app. So this is like a seamless experience, which is not possible with PSD2 by default, because we are talking about commercial card transactions. So this basically the reason why we decide to work also with smaller organizations, even if the upside of the customer base might be smaller, is basically to prove our point that there's value in for the customer. So this is one of the reasons why we decide. Other reasons, therefore, is decision-making processes are normally much quicker because of the organizational structure. If I talk today to a big German bank or maybe a bank from UK, they are not by definition slower or inferior. It's just a matter of acknowledging that the complexity of their organization is growing exponentially. And if I talk to a bank which is maybe 10 years old and has just 200 employees, it's different compared to talking to a global bank. So this is why we actually do it. But always having the perspective in mind that if we prove that it makes sense, go to the others and say, look, we made it work, and if this is value to your customers, we can do it with you as well.
So that means you're needing a kind of technology infrastructure you can work with idly. And on top of that, it's, as we heard it so many times this morning also, the question of speed.
Yeah.
Yeah, okay.
Yeah.
So, but you are willed to partner and collaborate. Yeah,
Yeah.
so you don't build your own stuff. So you're looking forward for partnerships, etc.
Yeah.
And this seems to be a trend, this partnership approach, because just last week, UK banks, they published a Fintech collaboration toolkit, they called it. And in the Börsenzeitung, staying in Germany, they wrote, I think it was in October, end of October, there was an article and they were quoting a PwC study around cooperation in between financial institutions and fintechs. And they said that there's a development seen since 2017, and that we can see, meanwhile, in the German market, 850 partnerships already, and there are 562 partnerships in between fintechs and banks. So, Julian, you are dealing with both, because you are heading sales for financial institutions and fintechs, yeah?
Correct.
So you're very close to both of them. Do you see more partnerships in between? Is there a different approach? Has it changed? Is there movement?
I would say strongly yes, but I won't say that there are two partners or two parties. I would call it an ecosystem, because on the one hand we have the FIs, on the other hand we have the fintechs, but they're all working in the financial ecosystem. I think those two are a great example. So they are fulfilling one need. I think there are just a few fintechs that really wants to be the conqueror of the world, that wants to build the bank of the future and wants to integrate every services they can imagine. So the question that banks are asking themselves actually is, first of all, should I build everything on my own? So is it really something just because I heard and there's a new fintech doing crazy things that I should do it too? That's the first question. The second question is always, what does my customer want? And where's the business case? Because never forget that just a great idea without customers is still just a great idea. And I mean, if we look 20 years back, you said 2017, right? But if we look when I started in a bank, which is unfortunately already 20 years ago, there was this crazy thing called internet appearing. Suddenly, there was this thing where all the banks said, oh wow, tomorrow we will not exist anymore, we will not have branches anymore, we will just have direct banks, and I started in such a crazy direct bank. But to be honest, what happens, you will see it, you are just looking, being a financial institute, you have the trust of your customers, and trust is very, very important. I think people trust still more their bank than an MNO. So use this trust, build a new, and it happens, a new entity, go for new suppliers, and then integrate all the possibilities you have is something that is real. I mean, it sounds easy, it is easy. So the question is, if just imagine you use one platform, you integrate all those services into this platform, and on the other hand of the platform, you have all the banks using it. This would mean that the scalability for every fintech is much easier and quicker, and every bank can use every service, and at the end of the day, the consumer, the end customer, decides which service he wants to use.
That was exactly also what we discussed this morning, what we heard, that we have
I wasn't
to
up there
think,
this morning, sorry.
we have to think of platforms really to plug in and play with all the capabilities that are available and to find the best solution out of it, also technically. So Nikolai, are you happy with this approach? Do you think that, for example, on a platform you can leverage your services even more and bring them to a broader audience?
Yeah, I mean, I would say it's like the holy grail that we talk about for many years. I've been working in a company builder which was doing only fintech before, And I remember us actually doing the slides on unbundling, rebundling, and then doing new stuff based on the platform. And I think the big challenge is actually to realize that you can talk a lot about innovation and things that could happen, but then actually, as you mentioned, it has to be a business case and has to be also somehow fulfilled. And I think it's also important if we actually talk to our partners that they have a more long-term perspective on things, because if they decide to work together with us today, it doesn't mean that in 12 months they are going to have great results, because normally it takes time. So what I would always try to advocate is to think more entrepreneurial and like an investor if I'm working as a bank, because if I believe, for example, in Joakim and his product and the traction that he already gained, and he can replicate it maybe in Italy or in Germany when he enters the market, it won't be maybe happening over the 12 months, the first months, and also there might be some hiccups happening on the way there, because this is just how things go, but actually I have to stick to it, and if I have the strong conviction. And the reason why we work with or are seeking to work with financial institutions is because what we offer is very complementary to their offering when it comes to credit cards. Yeah? So if I would go there and tell them, look, I have a white label e-commerce platform that you can offer maybe to some merchants, they would not be able to sell it, and it would be just too much asked, because it's not part of their core strategy. But if they want to drive commercial cards usage because there's a business case behind it because of the interchange regulation or the unregulated interchange fees, and we offer a product which makes it more easy to use the credit card and more superior compared to paying something with my Miles & More credit card or just with my cash, then this is what actually makes it exciting. And why do we want to work? Because it's a matter of trust and reach, because we have today maybe a couple of thousands of customers, but if we could, for example, leverage the platform of Wirecard or Deutsche Bank or any other established institution, this would be like a big leverage for us, but it comes also with many ifs. This is also something that as a startup you have to acknowledge. This is why I would not bet everything just on working with financial institutions. This is why we do also direct sales. This is why we work also with tax firms and B2B travel agencies, because in the end it has to be a portfolio mix, but I have a true strong conviction that if you take the existing infrastructure and bring there the new services, that is going to be just better for any type of customers, no matter whether it's retail or commercial.
Yeah. And there's always, I think, more than one kind of partnerships you can have.
Yeah.
Can be about sales, can be about integration, white label, whatever. I think this is also important.
Yeah, the different facets.
Yeah. And Joakim, do you want to build your own payment system one day, or what is your approach?
If we just travel back in time a few years, we actually launched Minna Technologies as a B2C application, because when I started working within this field 4 years ago, I went to talk with the banks and I said, hey, I need access to your transaction data. They threw me out of the room. If I come back today and have the same conversation, the red carpeted out, so please come in and have a drink. If we take the classic Andreessen Horowitz quote that the battle is between if the incumbent gets innovation before the fintech gets distribution. And we have made a complete bet that the incumbent will get innovation, and that's the journey we're supporting.
Okay, that's a good one, because I want to ask Julian, do you think that banks digitize before fintechs will scale, or will it be the other way around? Any ideas about the future?
I perhaps repeat myself, but I think if fintechs scale, they can do it together with a bank. It's depending on where is the fintech making his first priority. For example, for him, he can scale as much as he wants, and the other banks will still exist. So he is not a competitor. Again, I would more see this as an ecosystem, and both have the right to live in this ecosystem, and both should be there and collaborate. But you wanted to say directly something.
Sorry, this is my favorite questions. So when we started, we were actually a competitor to the retail bank. So instead of the user going into the bank channel, they would download the Minna Technologies app and spend their time in our channel. Now we are no longer a competitor. We actually make the consumers go back into the bank instead. So we live in a joint universe instead of competition.
Right.
And it's, from a consumer perspective, the best, since I don't need another app. I have enough apps. The bank is giving me more value, and I'm happy.
Right. And the ecosystem is profiting from all this.
Yes, and of course, it's a mutual business case.
Yeah.
And I also think the more fintechs we have operating even in the same area, the better it is. Just imagine, I had an example where a customer came to me, it was a fintech with an idea, and I said, but you already have a customer who is a competitor in the market. Why haven't you talked to us, being your payment facilitator, whatever, behind? He said, yeah, because you are already working for the competitor. And I said, yeah, but that's the best thing that could happen to you, because we have already the experience of the business, so we can help you not making those mistakes again, and you are responsible to be unique towards the end customer. And I think this is what the banks can be, unique towards the end customer, using as much fintechs and great ideas in the background so that they can also scale. Because what should not happen is that you integrate 100 ideas and just 3 of them are useful and then 97 are disappearing. That's the matter of the business case.
Absolutely. So let me ask one question, which is a little bit outstanding from the rest. Is Nikolai, I'm interested in one question around how do you ensure that when you're going out to the banks that you're talking the same language, that you're not the one coming into therein with a shirt and a sneaker being completely different. How do you ensure that you're finding a common language?
I think it comes down to have had experience, and experience comes from wrong decisions. So I remember I had actually 4 years ago, I had once in a meeting with a senior executive from a very big German bank coming from New York. And I was sitting there having a good talk, and then actually when it was about saying goodbye, I stand up and I was wearing a very, very tight jeans. And I saw actually how he looked at me. He was very, very shocked because he was not used to it coming from the States. And actually, I mean, you learn over time because when I was working for Finleap, my former company, basically the people came from the ad tech industry, advertising technology, very fast moving, build things and break them at the same time. And basically, over time, actually, we got many conversations with banks and with executives, and then you start to learn actually what's their strategy, what is driving them, and also actually what is important for them. So one product that we actually done before Circula was the Kontowechsel service that you might have known from the retail side. And it means that with my co-founder, we implemented it at banks like DKB, Hypovereinsbank, many Sparkassen. And then over time, you also start to understand why compliance and data security or these kind of aspects are so important to the business. And this is also how you build up trust. And if today I'm actually meeting a bank and we talk about why our small, nice app might make sense for them, he actually understands that we are not just 2 dudes coming from Berlin trying to sell you some flashy app, but actually we understand what is driving your decisions and why this could be a strong value-added service to you. So I think, and what also supports is our investors. So for example, the former general manager of Mastercard, Norbert Gebhardt, is invested in our company, but also people like Nikolai von Theissen, who is an entrepreneur with a strong background in payments industry. And these people bring also trust, and they do the introductions. I think in the end it's a people's business, and it's a matter of having people that help you also to meet the right people, and then also prepare you for these kind of conversations.
Can Visa support?
Of course. I mean, this is what happened a couple of weeks ago when we were here in Frankfurt and we pitched at the Visa Everywhere initiative, and luckily we won. And what happened afterwards, it was not just some PR, but actually last week we had a quite detailed workshop already with people from the product team as well from Visa, because actually now it's about evaluating quickly how we can proceed. And maybe in a couple of months we will find out that it's more of a loose distribution partnership or it's actually product partnership. But I think it's important to set expectations right on both sides and act quickly, because for us it's about survival in the first 1, 2, 3 years, and this is why it's important to have also partners that acknowledge this kind of facts. Yeah.
I'd like to jump on one sentence that
Yes,
you
please.
said, because you said value-added services.
Yeah.
So I think this is crucial, because we have so many data, everything Ute said, it is digital, real time, it's getting faster. And to be honest, payment is not sexy. I've never seen someone walking in a shoe store at the cashier system say, yes, I am allowed to pay my shoes.
wanna pay.
Never saw this before. So this is what Amazon is trying, the one-click store shopping, whatever, making it fast, convenient, that you can offer him something, a value add afterwards, immediately afterwards, that he forgot that he just paid, and perhaps is purchasing something different. And I think in the banking environment, it's exactly the same. Banking, also, sorry for that, is not really something that is not boring. I mean, I have never ever in my life seen someone who was sitting in front of his computer and making money transfers and saying, yes, I'm allowed to transfer money. So everything that we are giving the customer as a value-added service, and I mean really value-added service, is something that helps the banks to keep their customers happy, and at the end of the day to earn money.
Yeah, and to be honest, we were touching briefly this morning the Chinese giants, really briefly, and this is exactly what they do. So they implement payments in this kind of everyday experience, exciting experiences, etc. But just as a quick note. Okay, thanks a lot. That was great. So we were talking a lot about platform. We were talking about partnering. We were also talking about SME business. So a lot of topics we already touched during the morning. So I'm very happy about that was, and that we get the linkage. And I would like to open now. Yes, I want to open a kind of discussion round, and ask the audience if there are any questions around. You want to ask some questions? We can't see you, so
We can ask the audience.
but we're happy to take your questions if there are any. Yes, I can see one. So there should be a microphone provided.
Hello, Kurt Kammerer from Regify. This is for the audience, for the panel as a whole. How do you see the regional developments as we are working in China, for example? You have a much higher penetration when it comes to consumer payments. You have close to no penetration in Germany when it comes to the newer forms of payments. And how do you see B2B evolving?
Sorry, can you just repeat the last thing of the question, because there was this applause. How do we see the B2B?
Yeah, the B2B payments evolving, the B2C, the first part of the question was for the B2C, the different patterns of payments. You see WeChat, you see Alipay coming to London, for example. And the second part of the question is, how is B2B payments affected, if at all?
Well, I run a B2C company, so I can try that one. Even if the penetration rate is not that evolved in Germany at the moment, I really think that the WeChat phenomenon, or as we call it, the portal behavior, will be super visible in Europe very soon as well. So from a consumer perspective, once again, I don't want to have several different payment methods. I want the one that is most convenient for me, which is a need for many different solutions, of course. And it goes for digital banking as a whole. You can see JP Morgan Chase putting all of their apps into one app, because you don't want a separate app for savings and a separate app for wealth management. It all comes into one single portal, exactly as WeChat have made. So I think that's significant from a B2C perspective. And
But I think from the B2C perspective also, I think in Germany at least, there will be an announcement very, very soon, and has already been in the media, that there will be a huge mobile player making his payment available via phone. So I don't say any names, but you know what I mean. And I'm pretty sure the currency of the future is the battery of your mobile. Meaning the consumer will pay with his mobile, he will pay with his fingerprint, perhaps another authentication method, I don't know, but what's happening in the background, that's our work. So if he pays with WeChat Pay, if it's another app or whatever, I think he doesn't care. He wants to have a seamless payment method, he wants to have it convenient, real-time, and then again, payment is not sexy, he don't want to see it anymore. And from a B2B perspective, I think the only difference there is that the volume is higher and that they need a kind of reinsurance, and usually they have a longer time to pay the money back. I think that's all. On the other hand, a lot of transactions are done in the internet. I mean, not from the mobile actually, but as soon as the supplier has a purchasing app, what is this transaction then? Is it a mobile transaction, an internet transaction? I don't know. It's just a question of security. So I would say also the value-added services are coming into the B2B business once, because this will help them to make their purchases easier and quicker. But I don't see such a strong diversification between business and consumer payment, just coming from the payment area. I'm not talking securities in the business area, but just the payment.
So a lot of developments are going on in the corporate space, in the B2B space. We're not talking now in detail about products that can be provided for corporates to help them to digitalize. There are in the market they are asked, and we're working on that one from Visa perspective. Nevertheless, what we can see in a general aspect is that the fintechs, and this is quite all over Europe the same, they are mainly working on on lending, they're working on health, and they're working on SME. And you see quite big players already in the market, like Holvi. It's a Finnish company, and they are causing a lot of movements in the markets. And I think SME is really something, that a lot of stakeholders will look in.
But can I add something there? Because Holvi, Contest, all those players who are working in the B2B area,
Yes.
offering loans, offering an account or a card, whatever, are working with people like him, saying, okay, we offer you a bit more. We offer you something where you have a value add to your actual bank account. And that's why they're so successful, because they're operating with tax authorities, or they're making travel expenses quicker, or whatever is existing in this world. So there the question is only, why could I not cooperate and integrate this into my FI app functionalities or account app functionalities, and then there could be scalability.
Exactly. So you see there's movement in these areas.
Yeah.
So great. Another
I think
question?
there was a question somewhere.
Yeah. Okay. One quick question from here. So we talk a lot about innovation and fintech, and how obviously software is helping in the traditional financial systems to solve customer problems today. One of the challenges that fintechs have today is access to the APIs, and this question is more to Visa, because obviously I know you're investing a lot in developers, APIs, and so on. So do you expect in the future to be able to allow much more the fintechs to actually integrate to you? And I know you mentioned the fast track, but the fast track is just a fast track and it's a pilot state. But today, if you're a fintech, you want to go and offer a lot of innovative solutions, you need to go to companies like Wirecard or other issuers that are existing there, and obviously those are not very cheap, and this is actually one of the biggest barriers to entry in the financial services market, in the fintech in general.
Yes.
So what is the Visa stand in terms of future and innovation on that aspect?
So what I mentioned early on is that we want to increase the network, and we're doing it in several ways. So we were talking about fintechs fast tracking. That means they can be partner, they can be issuer in the system, and to offer more consumers better commerce experiences. But I was also talking about partnerships, where we invest in accelerating good ideas. And what Nikolai mentioned earlier on was the topic you touched first, was that of course we look into what you are offering and what can help and enrich also the banking systems, and perhaps to make it an API, why not? So that the whole ecosystem, that our ecosystem can really profit from that one. So you're fully right, it's a great approach, and we are not following one route, but several routes at the moment.
Okay, thank you.
So, 0000. No more time left, that's perfect, thanks a lot. And now, thanks a lot for this discussion, and thanks a lot for the questions. Unfortunately, I cannot see anybody, but anyway. And now I'm very happy to say hello to Mark Nelsen. I don't know, he's approaching this. So Mark is really a champion for payment system security for the industry. And as I mentioned earlier, he's globally heading risk products and business intelligence around risk. So it's great to have you here, Mark. You will focus on open banking and SEA, but what is even more important, the opportunities resulting from these big changes.
Yes, thank you. Yes. All right, it's great to be here, folks. Here talking about the era of open banking. I think that's what my slide said, and it's wonderful being here in Germany to talk about open banking, because it really did start here. You guys have been using APIs that third parties can connect to the banks and you've been doing that for years. And the rest of the world is trying to catch up and implement a similar type of approach whereby third parties can get access to bank account information if the consumer opts into that service. And so we specifically have that in Europe with the PSD2 regulation. But as I mentioned, it's actually happening all around the world. And so I'm heading up, as of 4 months ago, I'm heading up the Open Banking Initiative. Today, I'm going to talk about a couple of things that we're doing specifically around PSD2, some on the strong authentication piece, as well as on open banking. And there's a couple of products that we're going to talk about. And this legal notice is just to let you know that by the time the products launch, they may change from what I say today. So you can't hold me completely accountable, but they'll be similar. So today, we're going to talk about what we're doing in PSD2, and specifically our approach to it, and then what we think we can do to help accelerate progress together. And just to give everyone a quick reminder, a quick refresher, there's a lot of things within the PSD2 regulations. We are going to focus on two today. One is strong customer authentication, and the other is the open banking aspect. And if we dive into strong authentication, it's really about security. So how do we create stronger security in e-commerce and digital payments so that we can lower the fraud rates? That's the entire objective. How do we lower fraud, increase security? Unfortunately, that typically means more friction when we check out. So come September next year, that's when the strong authentication requirement is in place. When you buy something online, you're supposed to have multiple forms of authentication, right? And that typically doesn't happen today, which means consumers next September, when they buy something online, they may experience a different type of checkout experience. So there's a lot of concern from the merchants, because the merchants are going to be concerned about the influx of calls saying, well, why did you ask me to do this? Why did you ask me to enter a passcode? I haven't done that before. The issuers are going to get a lot of calls as well. So there's a lot of anxiety around Europe about how is strong authentication actually going to be implemented? How is it going to be communicated? Our consumers have no idea what this is. They have no idea what this means to them. So there's a lot of work that we have to do across Europe to start to explain to consumers what this is, as well as to our merchants. Because what we have found is that there's really kind of two types of merchants. There are merchants who are very familiar with this, and they're doing everything they can to take advantage of all of the exemptions that are allowed. And there are other merchants who really have no idea what's happening. And so we also have to start to communicate more broadly to the long-tail merchants so that they're aware of the changes that are coming this September. But the one thing that we're going to talk about today is this, on the screen here, you see this exemption for low-risk transactions. There's actually quite a few exemptions that are outlined in the regulations. And the exemption basically says, if you meet this type of transaction, you don't need to ask for strong authentication. And so guess what? A lot of our merchants are thinking, oh, that sounds good. I want to take advantage of as many exemptions as possible. What can you do, Visa, to help me? And so we're going to talk about a couple of things we're doing there. And also then, let's just say I do need to authenticate. And I'm checking out online, and the issuer asked me to authenticate. What can we do to make sure that it's the best experience possible? And so we'll talk about some things we're doing in that space as well. So that's strong authentication. There's a lot of anxiety around this. There's not a whole lot of time before September hits. So everyone is trying to figure out how quickly can we make sure that we have the right technology in place so that we're compliant with the regulations and we have the right solutions in market. Hopefully this is working. And then we talk about open banking. Open banking is really about driving innovation. And there's innovation in financial services. So if I give my bank account information to a third party, what incremental value can they give to me? What types of offers can I get? What types of better loans can I get? There's a whole variety of services that are out there, as well as with the PSD2 requirement, you also now have the ability to initiate a payment directly from your bank account. And so you're going to see a wave of new types of ways to pay going forward as well. So we'll talk about things we're doing in that space. So before we get into the actual details, When we look about building products around PSD2, we just had a couple of guiding principles. One, and Charlotte mentioned this earlier today on the main stage, we want to focus on giving consumers the choice and the control to know where the data is being used and who should get access to the data. So we want to innovate around consumers with their ability to control where that is. And ultimately, that helps to build trust and security in the ecosystem. And that's important because as we expand our data sets and we start to use more of the bank account information, our data is going to be more broadly proliferated. So we want to make sure that as we deploy this data and as data becomes more available, it is actually protected. So we have security by design so that the data that's being exposed, there's protection around it. And then lastly, we want to foster competition by also employing open standards as much as possible. So the solutions that we're building are really designed around open standards so that other card networks and other networks domestically can take advantage of similar types of techniques so that merchants can deploy these across a broad set of scenarios, not just limited to Visa. So those are guiding principles. So let's dive in and talk about the 3 things that we're doing. We're going to build some products. This is really products to help our clients optimize for PSD2. We're also going to have programs, and programs to Visa are a set of rules. So if you're going to use our products, if you're going to be compliant with PSD2, here are the Visa rules that you need to have in place from a performance perspective, for example. So if you're doing strong authentication and your abandonment rate is 3 times higher than the average in your market, that means you're doing a terrible job, and you're going to be fined by Visa until you get to be better at what you're supposed to do. So that's what we mean by a program. You have to have minimum performance standards in order to comply with the requirements. And then also just compliance. So what are the techniques and technology and data that we can give to acquirers, to merchants, and issuers to make sure that they're compliant with the regulation and they're taking advantage of everything they can do in a legitimate way. Let me just take a sip of water. Okay, ready to dive into the products. We're going to start with strong authentication. The most important, or not the most important, but I would say the most frequently asked question that I get at Visa from the merchants are, what solutions are you bringing to help us take advantage of the exemptions? And one of the exemptions is a low-risk exemption, which basically says, if the transaction qualifies for low risk, which means you have a predictive model that's looking at all these types of factors when you calculate your risk score, if your risk score determines that it's low risk, you can bypass strong authentication. And for a merchant, that's great, because a lot of our merchants are hyper-focused on user experience, and they'll do anything they can to avoid strong authentication if they can. And if it's a low-risk transaction, then they technically have the rights to ask for a low-risk exemption. Now, ultimately, the issuer has the final say. Because if the merchant says, hey, it's low risk, Visa told me it's low risk, I want to take advantage of this low-risk exemption, the issuer still can say, no, actually, there's something unusual going on here that I see that you don't see, so I actually would like stronger authentication. So regardless of the exemptions, the issuer always has the final say, but what we're trying to do is help give as many places where a merchant or acquirer could ask for that exemption. So Transaction Advisor is a predictive risk model, and it uses our global view of payment data, our global view of fraud data. We create profiles, and every single time you use your Visa card, we look at up to 500 different data points to calculate a risk score in real time, from a 0-1 low risk to 99 being high risk. And historically, we've always given that risk score to the issuer. And we've been doing that for the last 15 years on our global switch. For our European clients, you just completed the migration to the global switch recently. So now all of our issuers within Europe can take advantage of this predictive risk scoring that we do in real time. But what we've done here is actually developed a model specifically for the acquiring community. And so an acquirer, if they want to, one, reduce their overall fraud losses on their portfolio, they can incorporate this risk score into whatever risk services that they have, right? It's just incremental intelligence that Visa can provide them. So acquirers can use this just to, one, reduce fraud in their ecosystem, but they can also use this risk score to help determine, does this transaction qualify for low-risk exemption? And if the merchant wants that, then they can go and use that and ask the issuer to say, hey, this is a low-risk exemption, here's why. So that's what Transaction Advisor is. It's simply a predictive model, uses all of the global view of payment data that Visa has, and it delivers it down to the acquirers or gateways on behalf of the merchants, right? So something that Visa's been doing for years now. It's using predictive, machine learning, artificial intelligence. It's quite predictive in terms of our view of the data. So that's one way that a merchant could take advantage of an exemption, is this low-risk score. The second option that we have is for trusted beneficiaries. Within the regulations, it basically says if a consumer indicates to the issuer that they trust this merchant, if that trusted relationship exists, then that subsequent transaction doesn't need to have strong authentication. And so what we looked at the regs and said, okay, well, issuers either have to build this on their own, and every issuer would have to build something equivalent, or Visa could build something for all of our issuers to take advantage of quickly. Because the regs are coming up quickly. September 2019 is not that far away. And if you look at the pressures that our banks are under in terms of development schedules, we thought, well, there's something that Visa can do to help the banks take advantage of trusted beneficiaries quicker. So we built a solution that allows issuers to identify which account holders trust which merchants. And the way this would work is, we called it trusted listing. The way it would work would say, let's say you have a card on file with a large merchant that you frequently shop at. And when you go to that merchant's website, if the merchant wants to participate in this trusted listing service as well, they can basically say to the consumer, hey, do you want to sign up? Do you want to trust me going forward? If the consumer says, yes, I'll trust this merchant, that request immediately goes to the issuing bank. The issuing bank says, hey, there's a request from this cardholder to trust this merchant. Do I want to agree with that or not? So they first can say yes or no. If they say, okay, I'll go forward, let me authenticate the cardholder. So they'll use 3D Secure to authenticate the cardholder. So they'll send you a passcode, or they'll have you enter your biometric. You'll authenticate yourself, and that then lets the issuer know that the genuine cardholder is requesting this whitelist, if you will. And once that happens, then the issuer, and we will send this on behalf of the issuer, basically sends a notification to the merchant saying, this account has been whitelisted. And what that means is the next time as a consumer I go to that merchant and buy something, the merchant can say, hey, this is actually a trusted beneficiary. This consumer has set me up as trusted. I can bypass authentication going forward. So they would send an authorization to Visa. We would say, yes, this is a trusted beneficiary. We send the validation, and we prove to the issuer that, that this is a relationship that's valid. So once again, what it does is it enables a seamless experience, and it still has the benefits of having authentication that happen up front with that trusted relationship going forward. So that's trusted listing. The other thing that we are going to do for this is, in order for a merchant to even sign up and say, hey, I want to take advantage of the issuer's trusted list that they're managing, the merchant must have a minimum fraud performance. And so it's not like any merchant can just take advantage of this and say, hey, I'm going to sign up for trusted listing. I can bypass strong authentication. That's not the intent at all. The intent would be that the merchant has a strong enough set of tools in place to manage fraud so that they can participate in this by asking their cardholders to enroll. So that's trusted listing. Once again, it's a service that Visa's building on behalf of issuers so that they can manage this relationship so that subsequent transactions from those consumers at those merchants can bypass strong authentication if needed. So it's another way for us to enable seamless experiences in a way that makes sense and is safe. So that's trusted listing. Once again, lots of work happening there. And then the third piece is biometrics. This is really, when strong authentication is needed, let's at least use something that's actually convenient. And we've done surveys all around the world, and not unanimously, but the vast majority of consumers prefer a biometric over a password or a passcode. It's just more convenient and it's safer. So if you're a consumer who's actually using biometrics throughout your life, if you're using biometrics on your phone, then we want you to be able to use the biometric as a way to authenticate yourself when you shop online. And so if you're buying something from your laptop and you have to authenticate yourself, you could simply go to your phone, enter your Touch ID, and that's it. And there's nothing else to do. So it's a very easy to use experience. You don't have to retrieve a passcode and enter it in. And the technology is available today. We have issuers around the world who are already doing biometrics as their form of authentication for e-commerce checkout. And guess what? The experience is amazing. And the abandonment rate is very low, and the fraud rate is extremely low. And so what we're doing to help, we have biometric technology that we are giving to banks to say, hey, if you want to enable biometrics in your strong authentication workflow, here's a piece of code that we can give to you to enable it. What we're also doing is putting rules in place that basically says, hey, by April of 2020, we want every issuer in Europe to at least offer biometrics as an option for consumers. So it's really meant to be, once again, going back to consumers have the control. If a consumer wants to use biometrics, then this is the solution. But they don't have to use it. If they're fine using passcodes or passwords, that's fine as well. It's meant to be optional. But what we're saying is by April 2020, every issuer must at least provide biometric as an option for their cardholders, right? And that's something that we can do to help accelerate the use of biometrics when we shop online. So that's biometrics. So those are three things that we're doing specifically around strong authentication. So how do we make sure that e-commerce remains innovative and we have these amazing experiences where it's all seamless without having to go and retrieve passcodes every time we complete a purchase online. And once again, the challenge we have is consumers don't know this is happening. They don't know the regs are happening, so we have to do some awareness campaigns, and we'll be doing that with our issuers. And also the long-tail merchants. They don't know that this is hitting them either. So there's a lot of education that we have to do as a whole to make sure that everyone is aware of what's happening. So that's strong authentication. Let's now just talk and spend a few minutes on open banking. And we started with strong authentication because strong authentication is still even the foundation for open banking. Because you can't really have this concept of open banking if authentication and security isn't in place. Because I'm not going to just give my bank account information over to any third party if I'm not sure that the data, one, is being secured, as well as we need to have the right authentication in place to make sure that the genuine person is giving over the bank account information. So security is foundational to open banking. If you look at what we are specifically doing in open banking, it's similar to kind of what we've done on the card side. There's over 50 million merchants that we connect with over 16,000 issuers. And if you look at open banking, issuers are publishing APIs that give them access to their bank account information. But there isn't a common standard. Now, there are standards that are being developed kind of by market. So Berlin Group has a standard, the UK has a standard. So there are some commonalities across the APIs that are being developed, but they aren't globally consistent. They're not even consistent across Europe. And open banking is happening globally. So what we see an obvious role for Visa to play would be for Visa to connect to the bank's APIs, so that if a third party wants access to a consumer anywhere in the world, they can connect to Visa, and then we can provide the connectivity to the bank. That's what we do today, and that's a natural place for us in the open banking world as well. So we would connect to the bank's APIs, and with that connectivity, if a bank provides access, if a consumer says, I'll grant you access to my bank account information, we can combine that bank account information with their card business as well to provide a really complete view about that particular person. And that complete view provides the foundation for innovation in terms of experiences. It gives us new ways to add value to real-time payments, as well as it helps us enable really seamless experiences going forward. So once again, the combination of the card data that we see today, plus the bank account information, plus any of the real-time payments that initiate, it gives us a really good, complete view of activity for a particular individual. And that's really what makes us unique. Today, if you look at just our card business, we process 6 billion pieces of data every day, right? So we already process a tremendous amount of data, and we do this in real time. We connect millions of cardholders with merchants as they travel. And this is really what's unique to Visa is we operate in nearly every market in the world. So no matter where you go globally, you can have a similar type of payment experience. And we can do a similar type of experience with open banking, but by the fact that we can connect to all of the banks globally, because everyone in the future is going to have APIs that they're going to publish. And so we'll be able to provide that connectivity to third parties, in particular to merchants who are global. And a lot of merchants are global this day and age, right? It's not just that you're only dealing with your small local community, because people are very mobile. And so everyone is affected by this. So we can connect all the consumers who are traveling. And then lastly, this is really about trust. And we have been voted the #1 payment brand that's been trusted by multiple different surveys, simply because after 60 years of processing payments, we know how to process data, we know how to protect data, we are trusted by consumers, and so we think there's a natural place for us to play in this open banking space, because ultimately, you're going to give your bank account information to entities that you trust, and once again, we think that we fit in a nice place in this particular space. So, how that all wraps up, we think there's lots of ways for our folks to innovate with us, either third parties, issuers, fintechs, connect to us via APIs. We can get you access to our existing APIs for card-based businesses, as well as new APIs for open banking and real-time payments. And all of this would be built to scale to the global payments, and as we travel and as we live in this ever global environment. On that note, that's all I had to say from a slide perspective. I think we have, according to the clock, 8 minutes for a few questions. Are there any questions people have on open banking or strong authentication? There's got to be one. I'll ask a question, unless there is one. I can't really see, though. I can't really see if there's any hands up or not. One question, I can't really see any hands, but one question that does come up, are these services that you're describing, like the trusted listing, does it only work for Visa? And what we did is we donated the technology, the specs, to the open banking standard, so we gave it to EMBCO. It's also using the tokenization standard that's managed by EMBCO. So the intent is that any card network could use that same type of technology to deploy it as well. And so it's meant to be a technology that can span multiple card networks as well as multiple markets. So that is one question a lot of people ask. Other questions? You don't want me just asking all the questions. Nope? Okay, well, on that note. Sounds good.
Great. Thanks a lot.
All right.
So this is amazing how you present that you can, even out of regulation, you can bring out more transaction, even more transaction, a more comfortable transaction for the consumer. It's great. So thanks a lot for listening, nearly about 90 minutes. So we heard a lot about the Visa network. Since 60 years, this network is being built. And we also heard that the world is changing, technology is changing, behaviors are changing, but Visa has changed. We're now bringing products from made by Visa to enabled by Visa to you. We were discussing with our panelists from Circula, Minna Technologies and Wirecard about how to partner and how to bring solutions together, how to bring, at the end, the best solutions to the customer, to the consumer. And then we heard finally about the huge impact of regulation and about open banking. So let us all together make, out of digitization and out of regulation, let's take the opportunity to work together on all these topics, and we are really looking forward to working together with you. Thanks a lot.